If you qualify for a VA loan and you're not using it, you're leaving one of the best home buying benefits in America on the table. VA loans are powerful, but they're often misunderstood. People focus on the benefits, but they don't always understand the rules. And when you don't understand the rules up front, that's when problems show up later. So today, I'm going to walk you through the VA loan requirements for 2026, step by step in plain English. We're going to talk about who qualifies, credit scores, debt to income, residual income, funding fees, closing costs, property rules, and how to use VA more than one time. And before we start, if you're active duty, a veteran, or a surviving spouse who qualifies, thank you. I appreciate it. I really do. My name is Jeb Smith. I've been making videos here on YouTube for the last 5 years on real estate, VA loans, all of that. I'm a real estate broker here in Southern California, and this channel is about helping you buy smart and avoid bad communication. So if you find any value in this video, make sure you hit that thumbs up, consider subscribing to the channel, and drop your VA questions in the comments, and I'll come back and answer them. All right, let's get into it. So let's start with talking about what a VA loan actually is and what it's not. A VA loan is backed by the Department of Veterans Affairs. But here's the key. The VA does not lend you the money. The loan comes from a lender. That's either a mortgage broker, a bank, a credit union. And this matters because I regularly talk to veterans who think they're talking directly to the VA when they're not. They're just talking to a company that has VA or veteran in the name. Those companies are not the VA. They're for-profit lenders. Some are fine, some are expensive, some have stricter rules than VA actually requires. So rule number 1 in 2026 is don't go on Google and search VA loans, and definitely don't call a lender that has veteran in the name. And on top of that, make sure you're getting multiple quotes and work with someone who actually understands VA loans, not some kid in a call center. So with that, I want to talk about who's eligible to actually use a VA loan. You can't use VA financing unless you're eligible. And yes, I've seen people who've served assume they qualify and later find out they don't. Eligibility depends on things like when you served, how long you served, and the type of service. It can also apply to National Guard, reserves, and certain surviving spouses. So here's a quick example. I've worked with National Guard members who assumed they didn't qualify because they were never deployed overseas. In reality, they had enough qualifying service time and they were fully eligible. The only way to know for sure is with one document, the Certificate of Eligibility, or the COE. The COE does two important things. First, it confirms you're eligible. Second, it shows your entitlement. And entitlement matters if you've used VA before or you want to use it later again. Here's a real-world example. If you bought a home with VA years ago, sold it, and paid off the loan, you may have full entitlement again. But if you still own that home and turned it into a rental, your entitlement may be partially used. Your lender can pull your certificate of eligibility for you, or you can request it yourself. Either way, nothing happens without that document. Now let's talk about something that's often misunderstood with VA loans, and that's this whole idea that they have no loan limit. Here's what that actually means. If you have full entitlement, VA no longer caps the loan amount the way it used to. That does not mean you can buy any house you want. You still have to qualify. So with that, let's talk about a quick example. If you make $90,000 a year, have a car payment, student loans, and credit card debt, you're not qualifying for a $1.5 million home just because VA has no loan limit. VA removes the loan cap. It does not remove the income requirement. While the program is powerful, it's not magic. Now let's move on and talk about credit score. The VA itself does not set a minimum credit score requirement, but lenders can. That's where confusion starts. Most lenders add overlays. That means extra rules on top of VA guidelines. Two veterans, same income, same debt. One has a 740 score, the other has a 580 score. Both may technically qualify, but the terms will likely be different. The lower credit score borrower may need more documentation, may get stricter underwriting, and may pay more with a higher interest rate. So while VA is flexible, credit still matters. If your credit score is under 600, expect more scrutiny. Not always a deal killer, but you need to be prepared. Now let's move on and talk about debt to income ratio and the thing that VA cares about more than anything else. Most people focus on debt to income ratio. VA looks at the DTI, but VA also looks very closely at residual income. Residual income is simple. After your taxes, your housing payment, and your monthly debts, how much money do you actually have left? Let me give you an example. Two borrowers both have a 50% debt to income ratio, which basically means you're spending half of your gross monthly income going towards debt. That includes housing payments, credit cards, car payments, all of that. So borrower 1 makes $8,000 a month and barely has anything left after bills. Borrower 2 makes $15,000 a month and still has several $1,000s left over. Same DTI, very different risk. VA understands that. That's why you'll sometimes see VA approvals that look impossible on paper. Higher DTI, but strong residual income. In fact, I had a client approved a couple of years ago that had a 67% debt to income ratio. So if your DT is high, that alone does not disqualify you. It all depends on the full picture. Now let's talk about one of those reasons that VA loans get a bad rap, and that is the VA funding fee. VA loans do not have monthly mortgage insurance, which is a huge plus. But with that, most borrowers will pay a one-time VA funding fee unless they're exempt. The most common exemption is service-connected disability compensation. If you're not exempt, there is a funding fee. For first-time use with zero down, that fee is 2.15%. So let's actually put some numbers to this. You buy a $500,000 home, zero down, first-time VA use, 2.15% equals $10,750. Most people just roll that right into the loan because VA allows you to finance it. So instead of financing $500,000, you're financing $510,750. But here's the important part. If you put zero down and finance the funding fee, you start out with negative equity. That's not a problem if you plan to stay in the home, but it is a problem if you think this is a short-term move. So in my opinion, VA loans work best when you have a longer-term time horizon. Now let's talk about another misconception when it comes to VA loans. No money down for the down payment does not mean you don't need any money to buy that home. You may still have closing costs, prepaid taxes, insurance, escrow, title fees. So a quick example could be if you're buying a $450,000 home, closing costs might be somewhere between $9,000 to $13,000 on that home. That's somewhere between 2 and 3%. Another question we often get is, can the lender offer a credit? And the answer to that is also sometimes. And the reason I say sometimes is because there's no hard, fast rule. That's why when doing videos like this, I think it's important to note that you should be talking to a professional. Don't just watch this video, take the information and go run with it and say, yes, I qualify based on what Jeb said. I'm ready to buy a house and go put in an offer without actually talking to a mortgage professional. Now, the key difference in a video like this versus a mortgage professional is not only are they going to talk about the same things I'm talking about here, they're also going to look at your documentation. They're going to look at your pay stubs, they're going to look at your bank statements, and they're also going to take a look at your credit report to see exactly how much debt you have. From there, they're going to be able to tell you exactly how much home you qualify for and what closing costs are likely to look like buying that home. So like I said earlier, don't go on Google and search for VA lenders. Rather, use that link in the description of the video, get in touch with my team and I. We help hundreds of people here on YouTube, and we'd love to help you too. Now, one of the key reasons I say that you need to talk to a professional lender is so not only do you know how much home you're going to qualify for, but you have an idea of what the closing costs might look like if you purchase a home in that price range. That way you know up front if you might need more money. Now let's move on and talk about property rules when it comes to VA. VA loans are only for primary residences. You cannot buy an investment property with VA financing. But here's a common question. Can you buy a home, live in it, then rent it out later? And the answer is yeah. But you cannot buy it with the intent to rent it out immediately. And the key here is intent matters. So let's say you're buying that home as your primary home, you move into it, and then a couple of months later, maybe you get stationed somewhere else, and now you don't want to sell that property. Can you turn it into a rental? And the answer is yes, because you originally intended to occupy that home as your primary home. There's no problem now because you're getting transferred out of state that you can't make it a rental. In addition to that, VA also has minimum property requirements. That means the home must be safe, it must be sanitary, and it must be structurally sound. A home with no working heat, major electrical issues, or safety hazards can become a real problem with VA. Fixer-uppers are not impossible, but they need to be evaluated carefully. And condos add another layer on top of that. If you're buying a condo with VA, the project has to be VA approved, which basically means not all condos out there are going to qualify. Now, it's important to note when you're using a VA loan that you're also working with a real estate agent that understands VA, that has the ability to look up these condos to make sure they're VA approved. I can't tell you how often I see realtors that don't understand that process. So with that, if you're looking to buy a home, don't have a real estate agent, and want one that understands VA loans, make sure you check that link in the description of the video. Now let's answer that question question, can you use your VA more than one time? And the answer is yes. VA loans are not just for first-time homebuyers. You can use it more than once, but it does depend on entitlement. If you buy a home with VA, sell it, and pay off the loan, you often restore full entitlement. That means you can go zero down again. If you keep the home and turn it into a rental, you may still use VA again, but you might need a down payment. This is why your certificate of eligibility matters so much. Now let's move on and talk about VA appraisals. People love to say that VA appraisals are harder. Here's the reality. VA appraisers do check for minimum property standards, but most issues happen because sellers and agents don't understand VA loans. If you're using VA, be cautious with homes that clearly have condition issues. It's not that VA is bad, it's that expectations matter. Now let's talk about what this process actually looks like in 2026. The key is to start with talking to a professional lender that actually understands VA loans so that you can go through that pre-approval process. There's a link in the description of the video where you can get in touch with our team. From there, they're going to pull your certificate of eligibility. Then you're going to provide income and asset documentations while they run your credit. From there, they're going to tell you exactly how much home you're approved to purchase. Then you're going to go to that link in the description of the video, connect with one of my realtor partners that understands VA. Then your offer is going to get accepted. And from there, your loan's going to go to underwriting while an appraisal is completed. And hopefully all is done and you're clear to close. But with that, I want to be very clear. It's never too early to start the pre-approval conversation, even if you're 6 months out, 9 months out. Because if something needs fixing, credit, job history, or reserves, you want time to address it. So let's do a quick recap here for the VA loan requirements of 2026. You must be eligible and confirmed by your certificate of eligibility. The VA does not set a minimum credit score, but lenders might. You qualify based on income, debts, and residual income. Most borrowers pay a funding fee unless they're exempt. The home must be a primary residence. The property must meet VA standards, and you can use your VA loan more than once, assuming you have entitlement. So if you're eligible for a VA loan, it's one of the best tools you have to become a homeowner. But it only works if you understand how it actually works. So drop your questions in the comments and tell me this: are you planning to use your VA loan in 2026, or are you still figuring it out? Let me know in the comments. Thanks for watching, and if you served, thank you again. I appreciate you.